Hello guys, I'm Paris the Options Guy and welcome to the No BS Trading Podcast, and thank you very much for tuning into this special episode 1, right? And today we're going to talk about many things such as the CPI inflation data that came in last week, how FIIs have made a very big short position in index futures, and how the next week's FOMC minutes can affect the US markets and can change the expectations of the rate cuts or rate hikes that may happen in the future. So stay tuned till the end, because in the end, as you know, we learn one concept which helps you become a better trader or an investor. Let's start with the episode. Now, talking about what happened in the previous week, starting from Monday, where Mr. Amit Shah came on an TV interview and said that you should buy before June 4th, right? So he was talking about you should buy stocks or invest in the market before June 4th. So tell me, are you investing before June 4th? Are you bullish on the election results or not, right? Anyways, talking about Tuesday, where Jerome Powell had a speech, right? And he didn't say anything out of expectation. He just said whatever was already, in the market, or whatever was already in the investor's mind, right? Starting from no rate hikes expected in the coming meetings, right? He said it before also, and he said it again. May take longer for inflation to come down. Same. Inflation notable in Q1 for the lack of further progress, and that is what the market is also seeing, that inflation is not coming down very fast. Overall, a good picture for the economy. So the economy is definitely doing well. And then credibility is everything for the central bank, which I kind of laughed a little bit on that, but we'll talk about that in the coming episodes when we have some event which is linked very much to the central bank. Anyways, Nirmala Sitharaman also came in a convention, or I don't know what it was, but yes, she said that any unchecked explosion in retail trading in FNO can create future challenges, not just for the markets but for investor sentiment and also household finances. Yeah, I mean, talk about people, putting all of their capital in zero trades on expiry, right? So definitely, I think it is a very good thing that she pointed out about the explosion of retail trading in FNO. And if she's really serious about it, you can expect FNO trading to be much more harder to enter into, right? Because I think if she is putting a lot of attention on this thing, she definitely will make sure that the compliances, right, that you have to do to enter into FNO will be made harder, right? And she also said that in exchanges and SEBI should work together, but I think she will also come into the picture and give her own opinion to SEBI or exchanges on how it should be done. Anyways, talking about Wednesday, where we had the US CPI data and also retail sales data, where most of it came in line. April CPI at 3.4%, which was expected. Core CPI at 3.6%, which was expected. Month over month CPI numbers at 0.3%, which was a little less than the expectation of 0.4%. Now, in the last 3 months, this is the first time where the CPI has dropped, right? CPI was increasing a little bit, in the last 3 months, and it has dropped, but just by 0.1%, right? Last month it was 3.5%. Now it is 3.4%. So is CPI going down that fast? No, right? CPI is not going down that fast, and PPI numbers, which were not that important, but still, producer price index number, basically the wholesale prices, they actually increased, right? The inflation came out higher. So inflation is not slowing down. You need to keep that in mind. Inflation is not going down that fast, and the Fed is saying that their policy is very restrictive. If their policy is very restrictive, definitely don't you think the liquidity in the financial system will be much lesser? If the liquidity is lesser in the financial system, that means asset prices won't really fly off the charts, right? But if you see, asset prices are just blasting. Gold is at an all-time high. Dow Jones, Nasdaq, all the US markets are at an all-time high. Bitcoin is near all-time high, hovering near all-time high. Everything is going to the all-time high, right? So definitely there is a lot of liquidity in the market. So that means there is a lot of money still flowing in the economy, right? So how can the Fed expect then for the inflation to come down so fast, right? So I think if the Fed really has to bring inflation down, I think we still need a little bit more of a restrictive policy, right? Of a more restrictive liquidity policy that the Fed can, you know, go through. Anyways, that is about the CPI data, right? And if one more thing, the retail sales data, right? The expectation was that retail sales will grow by 0.4%, right? Month over month, but they grow by 0.0%. That means the retail is getting slower and slower. The consumer is getting slower and slower with their spending. This could mean that economy can very well start to slow down, right? And we also saw that in the GDP numbers that came out last month, where GDP expectations were 3.2%, GDP came out at 1.6% in US, I'm talking about. So definitely it looks like the consumer has started to slow down. And if the CPI does not slow down right now, keep this in mind, it would mean that that a stagflation is arriving in the US markets, and that will not be very pretty. Please keep this in mind, that will not be very pretty. But that is something that we will see in the future, how the numbers come up in the coming months, in the coming weeks also. But yes, do listen to this podcast every week to know what is exactly happening over there. Anyways, one more thing that is very important, and that is on Thursday, FII had their biggest index future short positions in since 2012. Right, since 2012 they had the highest number of future short contracts held, right? So that is telling you something, that are they expecting something bad to happen in our markets? Now the only big event that is going on in our markets and that is going to come is the election results. So are they expecting that some bad result will come in election which will be very bad for our markets? Now we'll need to see the data every day, right? How are these short numbers decreasing, right? Are they covering their shorts? Because the market has risen in the last 2 days, on Thursday and Friday. So are they covering their shorts over there, or are they still holding them regardless of where the market is going? Because if they're still holding them regardless of where the market is going, maybe they know something which we don't, right? And if you see in the last many years of the data, right, or many years of how FIs have performed, of how the market has performed before the elections, it could mean that and the price action that we are seeing right now could mean that we could get very bad results for elections also. But that is just speculation. We still have many more days, right? We still have 13 days until this month completes, right? And now I'm recording this on Friday, so you can say at least 10 days remaining, right, until this month completes. So we'll need to see, are these FIIs covering their short before the election results are out, or are they still holding it? So definitely we'll talk about it in the next week's episode also. But yes, I'll give you a link for an article which is a very, very good article which tells you about what this very big index future short position means. So definitely look in the description and I'll give you the link over there. Talking about Friday, where finally FIs turned net buyers in the cash market, right? I think they bought 1100 crores. And they've been selling since 2nd May, I think. Every day they come and and sell in the cash market, and finally they've turned net buyers for one day. Now, if they've turned net buyers, right, now they've turned, they've shorted heavy quantities of futures, right? And if they turn net buyers, we'll need to see, is this buying going to continue? Right? So this is also something that we'll keep a very close eye on, because this will determine where the market is trying to go and what the market is trying to tell us what could happen in our markets before the election, or how the election results can come. Because you see, we don't know what is going to happen, right? We don't have enough money also to get data from some external sources, right? Give someone 1 or 2 crore to get internal data which is not accessible to everyone, right? But these FIs have a lot of money. keep this in mind. They have a lot of money, and so they can get a lot of data that is not accessible to the general public, right? I'm not saying that they can get some sort of illegal data, but still they can get a lot of data which is not very accessible to the general public, right? So if they know something that we do not know, they will act upon it, right? And as I said, and as Amit Shah said, right, on Monday, that buy before 4th June, right? So all of these retail people will definitely go and buy. They will not think twice about this FNO data and whatever. What is that for them, right? They will just hear that Amit Shah said, Amit Shah said that buy before 4th June. I definitely need to buy, right? And so they will definitely go and take a buying position in the market. Now, if election results come bad, right, there will be such a big panic in the market that even a 4 or 5% fall won't be a big deal at all. But as I said, we will keep a very close eye on these numbers every week until the election results are out, and we'll see how the price action is coming out in the market. So yeah, that was it for this week. Now let's see what is going to happen in the coming week. Now next week there are no major events in our markets, but in US markets we do have some few important events that you need to watch out for. But keep in mind that on Monday our markets are closed on the account of general election, so please do not wake up at 9 a.m. and think why the hell are the markets closed, right? Anyways, talking about the US markets, on Wednesday we have the FOMC meeting minutes, and you need to keep an eye out for three things in the FOMC meeting minutes. First of all, what are the Fed's members thinking about the future rates, right? Where are they expecting the rates to be in 2025 or whatever, 3 quarters later, 4 quarters later, right? If there is any sort of indication that many members are thinking that the rate should be higher, this will not be very good. And keep that in mind, because the market fears that there will be a rate hike, and this fear will be this fear can trigger a very good panic selling in the market, at least for the short term, because Dow Jones is also at an all-time high. So there are a lot of long positions in the market which can get taken out if we see any sort of indication that many of the Fed's members are thinking about a rate hike rather than a rate cut. Now, at this time, most of the market participants are expecting one rate cut this year, right? And it was, just a little while back, it was 7 rate cuts. Right, from 7 to 6 or 6 to 7 rate cuts, we've gone down to just one rate cut this year. Now, what do I think? I don't think there will be a rate cut this year, given that the inflation is still high and it is not going down, right? And again, Jerome Powell also said that, until unless we have a greater control on inflation, we will not think about cutting the rates, right? But it's not just interest rates, right? There are many more things that affect inflation. So rather than thinking only about the rates, you have to also think about what are the other things. And one of them is the repurchase agreements that the Fed is doing, right? It is buying back its bonds, which is providing liquidity in the system, right? And they just increase the bond buyback. So that means they are trying to put more liquidity in the system, which is, it kind of puzzles your mind, because the inflation is still not down. So why would you put more liquidity in the system which could fuel inflation higher? Anyways, that is one thing. Second thing is any comments on inflation, right? If the Fed or Jerome Powell is expecting that inflation may not come down that fast, that can also upset the market. And third thing is any comments on economic growth. Because if economic growth looks like it is slowing down, now last week Jerome Powell said that the economy is in a pretty good condition. If, let's say, he changes his mind, which can happen, but yes, if he changes his mind and says that economy may not do so well, then also again that can be a bit of a bummer for the market, and the markets can go for a sell-off. But if he says that the economy is very good, economy will continue to do good, economy will grow strong, economy will be, the economic growth will sustain with lower inflations, that will actually be much more better for the markets, and markets can still continue to move up. Anyways, after that on Thursday, we have the US manufacturing and services PMI. Now, keep in mind that these data points, the manufacturing and services PMI, are only important if there is any adverse, unexpected result that comes out of these data points. If they are unexpectedly lower, that means people were expecting that the manufacturing and the services sector of US would be much stronger, there would be much more growth. But if they are unexpectedly lower, then we can expect a sell-off in the market, because then the market will start to expect that the economy is slowing down, and that can cause a sell-off. But if they are in line or close to the expectations, then it won't really matter so much. So these are some of the events that can affect the market in the next week. Now let's talk about what are the IPOs that are going to come in the Indian markets. Next week, we only have a single IPO, and that is of Awfis Space Solutions Limited. So this is India's largest flexible workspace solutions company. So what is a flexible workspace? Very simple. It is a creative sort of workspace. Now, a normal workspace or a conventional workspace would be maybe, where people sit in cubicles or where people sit in line, right, on a one big table. But a creative workspace could be a bit different, right, where maybe people have some sort of different type of desk setup, or you get the point, right? It is a bit creative. So Office Space Solutions is India's largest company that provides that type of flexible workspace. So these guys are coming up with a 599 crores of 599 crore IPO, and out of these 599 crores, only 128 crores are from fresh issue. So the company will only get 128 crores, and the rest of 470 crores or 471 crores will go to the promoters who are selling their stake. So this is a bit of a bummer. I think if the amount that was going into the company, if the company would issue more fresh shares, I think that would have been much better. But anyways, the IPO opens on May 22nd and closes on May 27th, right? And the listing date is on 30th May as of now, right? It may change in the future if something wrong happens, right? But I don't think something wrong will happen. We will definitely list on 30th May, right? And the minimum investment is 14,937 rupees. So should you apply in this IPO? So from the GMP perspective, the GMP is only at 18 to 20%. So from the GMP perspective, I don't think it is a lucrative bet if you are just applying for listing gains, right? So from the listing gains perspective, the answer is no. But from the financial perspective and from an perspective of investing in this IPO, is this IPO a very good deal, right? So talking about the profit after tax, the company is still a loss-making company. In the first 9 months of FY24, that is till December 31st, the company has made a loss of 18.9 crores, right? But last year, if you see, last FY, the loss was near 46 crores, and before that, the loss was 57 crores. So definitely the loss has started to come down, right? And from here, if you see, the revenue has also grown pretty good. In FY22, the revenue was 278 crores. In FY23, the revenue was 565 crores, right? So very big jump. And in 9 months of the FY24, first 9 months of FY24, the revenue stands at 633 crores, right? So it's a very good revenue increment. So I think this company can definitely very much become profitable in the near term. It won't take a long time for this company to become profitable, in my opinion, because these guys are actually much more efficient than their peers, right? So their peers include WeWork and one more other company which I forgot the name. But yes, these guys are actually much more efficient in their working. When you see the basically red herring prospectus or the DRSP, right? And again, you can also read reports on this IPO about from different brokers, right? And if you see, these guys are much more efficient in their working. So I think they definitely have the potential to make a very good profit. But what happens with these loss-making IPOs is that when they get listed, they initially come down a little bit and then they start to move up. Look at Zomato or look at PB Fintech. When they got listed, they were also a loss-making entity, right? And they corrected pretty sharply. Now, you can say that the environment was such that they had to correct, but I feel like if you do not have a lot of tolerance for risk, you should not apply to this IPO, right? But if you can definitely tolerate the risk and have a little bit of patience to get the returns, then you can definitely think about applying in this IPO, because the company is very strong, right? They have an ROC of 37.4%, which is extremely good, right? Definitely the return on net worth is negative because the profit after tax is also negative, right? But anyways, I think definitely this company has a very good potential. But if you can wait and if you don't want to take much risk with this IPO, then you can think about waiting it out and investing after the company gets listed, because anyways the listing gains are just 18 to 20%. So chances are that we might not even get that much and we might come down very fast, right? Because if you see Aadhar Housing Finance, the IPO that came out last week, it got listed at 0%. The listing gain, it also had 18 to 20% of listing gains, but it got listed at 0% gain, right? So I think definitely we can also expect a little bit of correction in this IPO also. So better, if you are not in a hurry to invest in this company, better would be to just wait it out and buy it after the IPO gets listed and gets corrected a little bit. Because with these loss making companies, many times we do see a correction in the market, after which they start to move up. So yeah, that was for the review of this IPO. Now let's look at the market analysis for the next week. Now talking about Nifty over here, if you see Nifty making a very good green candle, and go and check out the previous week's analysis on my YouTube channel, and I had said that we will not take a short position at lower levels, right? And this was the reason, because chances were that Nifty could have given a fake breakdown over here, and Nifty could give a fake breakdown over here and then start to move up, and that is exactly what happened. If you see in the daily charts also, Nifty tried to move down from here, right? But if you see, closed at higher levels and then has continued to move up from here. So it looks like that Nifty is not ready to go down, and same thing with Bank Nifty also, but Bank Nifty is much weaker as compared to Nifty. If you see, Nifty has already covered the candle, this red candle, right? Nifty is near the high of this red candle, whereas Bank Nifty is not even close to the high of that red candle. It is close to near 50%. Now the major levels that I had said in Nifty were 250 to 300, right? And those levels have been crossed. And in Bank Nifty, this zone was a major level, right? Now it hasn't been crossed in Bank Nifty, but yes, once we cross 48,500, only then we can expect Bank Nifty to sort of outperform Nifty, or at least go par with Nifty. Until then, Bank Nifty will be a little more weaker as compared to Nifty. So if we want to take selling trades in the market, we will think about taking selling trades in Bank Nifty and not in Nifty. And if we want to take buying trades in the market, we will think about taking buying trades in Nifty, at least until Bank Nifty breaks 48,500. Once Bank Nifty breaks 48,500, we will get much more confidence, and then we can think about buying trades in Bank Nifty. But as I'm a Bank Nifty trader, and as I have better hand in Bank Nifty, or better trading, I can do better trading in Bank Nifty. I have taken a Bank Nifty long position right today, but that is out of the question. What can you do for Monday? Right. First of all, let's talk about the daily charts for Nifty, and then we will go into the 15-minute charts also. In daily charts, if you see, Nifty is continuously moving up. So now, if we get a little bit of pullback and then we are again breaking 22,500, right? Maybe let's say we get a little bit of pullback and then we again break 22,500. This will be a very bullish sign, and this can definitely push us up till 22,700 easily. 22,700 to 800 will be the area which will then act as the next resistance. But if the FIIs start covering their short positions, right, in a hurry, if that happens, if they start covering their short positions, chances are we will not even wait and we will see a V-shaped recovery, right? Where the market will go down first and then go up without any pullback, right? And that will not really be very hard. Keep that in mind, because FIIs have huge short positions. So if they feel like they are on the wrong side of the market, they will not wait to cover their short positions. And whenever a short covering comes from them, you can see moves like this. This move will not be very hard to find in our markets again over here if FIs think that they are on the wrong side of the market. Now pros have turned a little bullish on the market. If you see the FNO data, pros have turned bullish on the market today itself, that is on Friday itself. So if they continue to make more bullish positions, this will definitely support the market even more. And talking about Bank Nifty, as I said, until unless we break 48,500, that is this level, we will not see more strength in Bank Nifty. Above 48,500, once we start sustaining, that is when we will see good amount of strength coming up in Bank Nifty. So I hope that is very clear for you guys. But yes, both are looking pretty bullish. Nifty more bullish because of the candle that they have made in the weekly charts. Now I think with this candle, it looks like they will not at least be breaking this low in the next week. It is pretty hard for markets to break this low that they have made this week. So it I think taking a short position over here will not really be a very lucrative bet. Rather than taking a long position in dips will be much better for both Nifty and Bank Nifty, right? Especially Bank Nifty, because Bank Nifty hasn't moved. So if Bank Nifty starts moving and if the shorts get covered in Bank Nifty, you can get very good trades in Bank Nifty also. So for the next week, I think we keeping at least not a selling view will be much better. If you do not want to trade, that is also fine. But yes, keeping a bullish view can help you guys in for the next week at least. If in the next week we make one more very negative candle, something like this, then we can think about being pretty bearish on the market, because then market will not really have any sort of support on the downside. Now, the concept that we're going to learn today is known as short squeeze. But to learn short squeeze, we first need to understand what is short selling, right? So in short selling, you first sell something and then buy it back at a later price. Now, conventional wisdom says that you need to buy something in order to sell it. You cannot sell something that you don't have. But in financial markets, there are many ways in which you can sell something first and then buy it back at a later price or at a later time. So when you short sell something, your position becomes -1 because you're selling something which you don't have. So you already, if you don't have something, that means you are at you are at level 0. But if you sell something that you don't have, that means you go to -1. Now, if you want to go back to level 0 or have no positions at all, or if you want to exit your short sell position, right? If you want to exit your position, what do you think will need to be done over here? We will need to add 1 in this, right? If I want to make this -1 to 0, that is exit my position, then I will need to add 1 into it, right? So when I add 1, that means I'm buying back my position. And when I'm buying back my position, that means I am creating demand in the market. So when you short sell, you are first of all creating a little bit of supply in the market. That means you are creating a little bit of selling pressure. But when you want to exit your position, then you are creating demand in the market, right? So if I sell my position first, I become -1. But if I buy back my position, I basically do +1 to my position. So my position becomes 0 in the end, right? So that means I've exited my position. So what does short squeeze mean is that when a lot of people start short selling in the market, right? There are excessive number of short sellers in the market. Then as soon as some sort of catalyst arrives, or as soon as someone starts buying or exiting their position, a chain reaction can start where all the short sellers at once start exiting their positions, right? So I'm going to give you a very simple example with this chart. If you see, this is a chart of GameStop, right, which is a US stock. Now a lot of people had short sold this stock. That means they had sold this stock even when they didn't have it in their basically in their portfolio or anything. So that means they borrowed this stock from someone else, and then they sold in this market. Now if they want to exit their positions, what will they do? they will buy back the stock, right? Now, if there are a lot of short sellers in the market over here, right? Everyone is short selling the stock, and if you see, the stock started to fall down over here, right? Because everyone is short selling the stock over here, over here, over here, over here, over here. At all these places, everyone is just selling the stock. That means there are excessive number of short sellers in the market. Now, all of a sudden, when someone starts exiting, there is demand created in the market, right? Because of this, more and more people start seeing a loss, right? Because if you're short selling in the market, you will make profit only when the price goes down. If the price goes up, you will definitely make a loss, right? So if a lot of people start seeing losses over here, that means more and more people start exiting their positions, right? This creates a chain reaction where all of a sudden everybody wants to exit the stock, right? Everybody wants to exit their short selling positions, and because of which there is a huge demand supply imbalance. And because of this, if you see, the stock went from, you can say, $2 to $3 all the way up to 120. Actually, not even 120, the stock had went all the way up to $300, right? So this is known as a short squeeze, when there is a very big demand supply imbalance because of too many short sellers being present in the market, or too many short sell positions, right? A position, if I short sell something, this is known as a short position or a short sell position. So when there are too many short selling positions in the market, and all of a sudden everybody starts exiting their short sell positions at the same time, this is known as a short squeeze. And because of this, we see very, very big moves coming in the market. And this had happened back in 2021, and now it has happened again in this stock over here, right? If you see, there was again this short squeeze in the market, which pushed the price up from almost $10 to $60-$70, right? And you can see this in many types of markets, even in our market sometimes, but it happens a little less in the market, in our market, because we have market wide position limits, right? Where exchange says that if, let's say, the short positions that are being made in the market reach a certain level, we will not allow you to make more positions in that stock or in that asset. So I hope you guys understand this concept of short selling. And whenever there is a concept of short squeeze, and whenever there is a short squeeze, keep in mind that the move comes in very fast. So if you want to capture fast moves, look out for short squeezes in the market and capture those. So yeah, guys, that was it for this episode, and thank you for watching till the end. And I hope you guys like this episode. And I know there are a little bit of inconveniences still in this episode, and a little bit of rough edges that I need to polish it out. But yes, do expect much more improvements in this podcast in the coming weeks. But again, thank you for watching till the end, and I'll see you next week on the same day in another episode. Bye bye.